Hey everyone, welcome back to Money Mastery Ideas. Today we're unlocking the secrets of cryptocurrency, how it works, why it's changing the financial world, and how you can take advantage of it. Whether you're just starting or looking to sharpen your skills, this video will break it all down in a simple and exciting way. So stick around because by the end you'll be one step closer to mastering the future of money. Let's dive in. 1. What is cryptocurrency? First things first, what exactly is cryptocurrency? In simple terms, cryptocurrency is a form of digital or virtual currency that uses cryptography for security. Unlike traditional currencies issued by governments, cryptocurrencies operate on decentralized technology called blockchain. This means transactions are recorded across a network of computers, making it nearly impossible to alter or counterfeit. Cryptocurrencies are designed to work as a medium of exchange, similar to traditional currencies, but they also have unique characteristics that set them apart. For instance, cryptocurrencies are typically decentralized and operate on a technology called distributed ledger technology, DLT. This technology ensures that no single entity or authority controls the currency, which can be appealing to those who value privacy and independence from traditional financial systems. 2. The history of cryptocurrency. The journey of cryptocurrency began in 2009 with the launch of Bitcoin by an unknown person or group using the pseudonym Satoshi Nakamoto. Bitcoin was created as a response to the 2008 financial crisis, aiming to provide a decentralized alternative to traditional banking. Initially, Bitcoin was met with skepticism, but it gradually gained traction and became a household name. By 2011, several alternative cryptocurrencies or altcoins began to emerge, including Litecoin and Namecoin. The introduction of Ethereum in 2015 marked a significant turning point in the cryptocurrency landscape. Ethereum introduced smart contracts, self-executing contracts with the terms of the agreement directly written into code, which opened the door for decentralized applications, dApps, and further innovation in the space. Since then, the cryptocurrency market has exploded, with thousands of different cryptocurrencies now available, each offering unique features and use cases. The rapid growth has also led to increasing media coverage, interest from institutional investors, and a burgeoning ecosystem of exchanges, wallets, and related services. 3. How does cryptocurrency work? Now let's talk about how cryptocurrency works. At the heart of most cryptocurrencies lies blockchain technology. Think of blockchain as a digital ledger that records all transactions across a network of computers. This decentralized approach means that no single entity controls the ledger, enhancing security and transparency. Each transaction is grouped into a block. Once a block is filled with transaction data, it's added to the chain of previous blocks, creating an immutable record. This process is secured through complex mathematical problems that miners solve to validate transactions. Miners are incentivized to maintain the network by receiving newly created coins as rewards, a process known as mining. However, not all cryptocurrencies use mining. Some, like Ethereum, are transitioning from a proof-of-work (POW) model to a proof-of-stake (POS) model. In POS, validators are chosen to create new blocks based on the number of coins they hold and are willing to stake as collateral, which reduces energy consumption and enhances scalability. Understanding these foundational concepts is crucial for anyone looking to invest in or work with cryptocurrencies. As we move forward, we'll explore the various types of cryptocurrencies and their specific use cases. 4. Types of cryptocurrencies. While Bitcoin is the most well-known cryptocurrency, there are many others worth mentioning. Let's take a closer look at some of the most prominent types of cryptocurrencies. 1. Bitcoin, BTC. The original cryptocurrency Bitcoin is often referred to as digital gold. It's primarily used as a store of value and a medium of exchange. Bitcoin's limited supply, capped at 21 million coins, contributes to its value proposition. Ethereum, ETH. More than just a cryptocurrency, Ethereum is a platform that enables developers to create decentralized applications, dApps, and smart contracts. Its flexibility and widespread adoption make it a key player in the crypto space. And Ripple, XRP. Ripple is designed for fast and low-cost international money transfers. Unlike many cryptocurrencies, Ripple is not fully decentralized as it is often used by banks and financial institutions for cross-border transactions. Litecoin, LTC. Created as the silver to Bitcoin's gold, Litecoin offers faster transaction times and a different hashing algorithm. It's often used for smaller transactions due to its efficiency. Cardano, ADA. Known for its research-driven approach, Cardano aims to create a more secure and scalable blockchain. It uses a proof-of-stake consensus mechanism and focuses on sustainability. Stablecoins. Unlike other cryptocurrencies, stablecoins are pegged to a stable asset like the US dollar to minimize volatility. Examples include Tether, USDT, and USD Coin, USDC. These coins provide a bridge between traditional finance and the crypto world, making them useful for transactions and trading. Non-fungible tokens, NFTs. While not traditional cryptocurrencies, NFTs represent ownership of unique digital assets, often used in art, music, and gaming. They have gained immense popularity, leading to new marketplaces and creative opportunities for artists and creators. Each of these cryptocurrencies serves different purposes and appeals to different audiences. As you explore the crypto space, it's essential to understand these distinctions to make informed investment decisions. Buying and storing cryptocurrency. Ready to jump in? Buying cryptocurrency is easier than ever. You can purchase coins on exchanges like Coinbase, Binance, or Kraken. Here's a step-by-step guide on how to get started. 1. Choose an exchange. Research and select a reputable cryptocurrency exchange that meets your needs. Look for user-friendly interfaces, security features, and a variety of available cryptocurrencies. Create an account. Sign up for an account on the exchange. You'll need to provide some personal information and verify your identity, which is a standard practice to comply with regulations. Deposit funds. Once your account is set up, you can deposit funds using various payment methods, including bank transfers, credit debit cards, or even other cryptocurrencies. Buy cryptocurrency. After funding your account, navigate to the market section of the exchange. Select the cryptocurrency you want to buy and enter the amount. Review the transaction details and confirm your purchase. Secure your assets. Once you've bought your cryptocurrency, it's crucial to store it securely. You can keep it on the exchange, but for better security, consider using a hardware wallet like Ledger or Trezor. These wallets store your crypto offline, minimizing the risk of hacks. Monitor your investments. Keep track of your investments and the overall market conditions. Cryptocurrency prices can be highly volatile, so staying informed is essential. Remember that investing in cryptocurrency carries risks, and it's wise to only invest what you can afford to lose. Diversifying your portfolio can also help mitigate risks. 6. Risks and rewards. Like any investment, cryptocurrency comes with its risks and rewards. The market is known for its volatility. Prices can skyrocket one day and plummet the next. While some investors have seen significant returns, it's important to approach cryptocurrency with caution. Risks. 1. Volatility. Cryptocurrencies can experience dramatic price swings. For instance, Bitcoin has seen its price fluctuate between a few $1,000s to over $60,000 in just a few years. Regulatory risks. The regulatory environment for cryptocurrencies is still evolving. Governments around the world are implementing various regulations, which could impact the market. 7. Education and awareness. As the crypto space continues to grow, so will the need for education. More resources, courses, and content will become available to help individuals understand and navigate this complex landscape. In conclusion, the future of cryptocurrency is filled with potential, poised to play a pivotal role in reshaping the global economy. Whether you're an experienced investor looking to diversify your portfolio, or a newcomer eager to explore the world of digital currencies, understanding the nuances of cryptocurrency is essential in today's rapidly evolving digital landscape. Thanks for joining us on this comprehensive journey into the world of cryptocurrency. If you found this video helpful, don't forget to like, subscribe Money Mastery Ideas, and hit that notification bell so you never miss an update. Comment below with your thoughts or questions about crypto, and we'll see you in the next video. Stay curious and happy investing.